Hello, I'm Daniel Reeves, and welcome to the Metals Thesis, a channel dedicated to real data-driven analysis of gold, silver, and the forces shaping the metals market. Here we move beyond headlines to examine structure, trends, and the logic behind price movements. If you're looking for grounded insights instead of noise, you're in the right place. Let's start today's analysis by first examining the key developments shaping the current market environment. It's Wednesday, the 25th of February. Hong Kong is stepping up its efforts to establish itself as a major international center for gold trading, a move that aligns with China's wider objective of strengthening its role in global bullion markets at a time marked by geopolitical shifts and historically high prices. Local officials have indicated that the initiative is designed to reinforce the city's position within the precious metals sector while also supporting broader national ambitions related to market influence and pricing power. The message from policymakers suggests that Hong Kong is being positioned not simply as a regional participant, but as a key node in the evolving structure of international gold commerce. Speaking at the opening gold trading session marking the beginning of the new year of the horse, Hong Kong's Undersecretary for Financial Services and the Treasury, Joseph Chan Ho Lim, outlined the government's intention to move forward decisively with the plan. He stated that authorities intend to make what he described as a full push to turn the city into a regional hub for both gold storage and trading activities. His remarks indicated that the strategy goes beyond incremental adjustments and instead reflects a coordinated effort to expand infrastructure, attract industry participants, and integrate Hong Kong more deeply into the global bullion system. Chan also emphasized that one of the central goals behind the policy direction is to increase the country's share of the international gold market and enhance its influence over price formation. His comments underscored that the initiative is not limited to local economic development, but is also connected to broader financial positioning at the international level. By strengthening trading capacity, settlement mechanisms, and storage infrastructure, officials appear to be aiming to elevate Hong Kong's relevance within global pricing structures that have traditionally been dominated by Western financial centers. The plan itself includes several practical measures intended to support this transformation. Among them is a proposal to expand Hong Kong's gold storage capacity to more than 2,000 metric tons within the next 3 years. Officials believe that increasing vault capacity will make the city more attractive to institutions and dealers seeking secure locations for bullion storage. Alongside this, the government intends to provide incentives for bullion dealers to establish new refining facilities in Hong Kong or expand existing operations. Authorities are also planning to strengthen cooperation with mainland Chinese institutions involved in the bullion sector, with the aim of improving cross-border coordination and deepening market connectivity. A key component of the initiative is the planned launch of a fully state-owned gold clearing system. This platform is expected to begin trial operations later this year and is intended to provide clearing and settlement services necessary for a fully functioning bullion marketplace. Officials see this development as particularly important in helping Hong Kong position itself as a credible alternative to established Western gold trading centers, including London. By building a clearing system under state ownership, policymakers appear to be seeking both operational reliability and institutional backing for the market infrastructure. Authorities are also pursuing closer coordination between Hong Kong's gold market and the Shanghai Gold Exchange. Strengthening this connection is expected to contribute to deeper financial integration between mainland China and the Hong Kong Special Administrative Region. Officials view this alignment as a way to reinforce liquidity, improve efficiency in cross-border bullion flows, and support a more unified Chinese presence in the global precious metals market. In addition, the Hong Kong government has moved to enhance regulatory coordination and liquidity channels by signing a memorandum of cooperation with the Shenzhen Municipal Financial Regulatory Bureau. The agreement is designed to support local gold dealers and improve collaboration between the two jurisdictions along the coastal mainland. Policymakers believe that stronger regulatory alignment can help reduce friction in cross-border transactions and encourage more activity within the region's bullion sector. Chan reiterated that the broader objective remains focused on expanding China's share of international gold trading and strengthening its influence over price discovery. He noted that pricing power in the gold market has historically been concentrated in Western financial hubs, and the initiatives being introduced are intended to help rebalance that structure over time. His remarks indicated that Hong Kong's strategy is closely tied to the wider national financial agenda rather than being a purely local development initiative. The policy direction announced this year follows earlier statements made in late 2024, when Hong Kong's leadership first signaled its intention to pursue a larger role in the global gold trade. At that time, the city's chief executive, John Lee, publicly outlined plans for Hong Kong to become an international gold trading center. He noted that the city already ranks among the world's largest markets for gold imports and exports by volume, suggesting that the foundation for expansion is already in place. Lee also emphasized that Hong Kong's stability and security within a complicated geopolitical environment make it an attractive destination for investors seeking safe storage for their gold holdings. He indicated that such storage demand naturally supports related activities, including trading, settlement, and physical delivery. According to Li, the development of the gold sector could stimulate a broader industry chain encompassing investment transactions, derivatives activity, insurance services, storage operations, and logistics support. His remarks reflected a view that the gold initiative is intended not only to strengthen financial markets, but also to generate activity across multiple related sectors. These combined developments signal that Hong Kong's push into the global gold market is being approached through infrastructure expansion, regulatory coordination, and deeper mainland integration, all framed within a broader strategy aimed at strengthening China's presence in the international bullion system. The initiative, as outlined by officials, represents a structured effort to reposition the city within the evolving global gold landscape while reinforcing its connection to mainland financial policy objectives. Developments connected to Hong Kong's ambitions in the gold market are also unfolding alongside broader regional movements involving official reserves and storage decisions. Late last year, several Asian countries began exploring options to store part of their sovereign gold holdings with the Shanghai Gold Exchange as it expanded its vault network beyond mainland China. This growing interest reflects the wider effort by Chinese financial institutions to increase their role in global bullion logistics and custody services, while also strengthening regional ties in the precious metals sector. According to a Bloomberg report, Cambodia's central bank is expected to be among the first to place a portion of its gold reserves in facilities connected to the Shanghai Gold Exchange. The report indicated that the storage location would be within the bonded zone of Shenzhen, where the exchange is developing offshore vault infrastructure. This move represents a notable step in the international use of Chinese-linked storage facilities, as it involves the relocation of sovereign assets rather than private holdings. The same report also noted that other central banks, which were not named, have expressed interest in storing gold with China, suggesting that the development may extend beyond a single country. Data from the World Gold Council shows that Cambodia's central bank currently holds about 54 tons of gold. This amount accounts for roughly 1/4 of the country's total foreign exchange reserves, which stand at approximately $26 billion. The scale of these reserves highlights the significance of any decision involving their storage location, since sovereign gold holdings are typically managed with long-term stability and security considerations in mind. Cambodia's interest in relocating part of its bullion therefore represents more than a routine logistical adjustment, and is being watched as an indicator of shifting preferences in reserve management. The decision is not widely viewed as unexpected given the close economic relationship between Cambodia and China. Over recent years, China has played a major role in financing and constructing infrastructure projects across Cambodia. Through the Belt and Road Initiative, Chinese firms have supported the development of key national projects, including the construction of a new airport in the capital Phnom Penh, as well as expressways and canal systems. These large-scale investments have deepened the economic ties between the two countries and have reinforced China's position as one of Cambodia's most important financial partners. China's role in Cambodia's public finances is also substantial. Estimates indicate that China holds roughly 1/3 of Cambodia's external debt. In addition, trade between the two nations has expanded significantly, reaching a record level of $15 billion in 2024. This growing economic integration provides context for Cambodia's consideration of Chinese-linked gold storage, as financial relationships between the two countries already extend across multiple sectors. The relocation of reserves would therefore be consistent with the broader pattern of economic cooperation that has developed in recent years. These developments are taking place within a wider global environment in which the structure of the international gold market is evolving. Analysts observe that China appears to be positioning itself to benefit from trends associated with deglobalization, particularly as the United States increasingly uses the dollar and its economic influence as tools of geopolitical leverage. At the same time, a number of countries have begun moving their gold reserves out of traditional international storage hubs such as London and returning them to locations within their own borders. This trend toward repatriation has been seen in multiple regions and reflects changing attitudes toward reserve security and financial independence. China's efforts to attract official gold reserves are viewed as one component of a broader strategy aimed at reshaping the global bullion system. Alongside initiatives to encourage sovereign storage, the Shanghai Gold Exchange has also been working to expand its network of offshore vaults, including those planned in Hong Kong. Increasing the exchange's physical infrastructure outside mainland China is intended to support greater international participation and to make its trading and settlement mechanisms more accessible to global users. By building a wider vault network, the exchange aims to reinforce its operational reach while also strengthening its institutional credibility. The expansion of offshore storage is also connected to the international profile of China's yuan-denominated precious metals products. By extending infrastructure into Hong Kong and other locations, policymakers and financial institutions hope to increase the visibility and usage of these products beyond mainland markets. The goal is not only to attract more participants into the Chinese trading system, but also to broaden the influence of pricing mechanisms that operate outside Western financial centers. This strategy reflects an effort to develop parallel structures within the global bullion market, supported by physical storage capacity, trading platforms, and settlement networks linked to China. Taken together, the developments involving Cambodia, other interested central banks, and the expansion plans of the Shanghai Gold Exchange illustrate how Hong Kong's ambitions fit into a much larger regional and international framework. The city's push to become a major gold trading and storage hub is not occurring in isolation, but rather as part of a coordinated set of financial, logistical, and strategic initiatives that extend across mainland China and neighboring markets. These overlapping efforts suggest that the restructuring of gold storage, trading, and pricing influence is unfolding through multiple channels at once, with Hong Kong positioned as a key location within that evolving system. The developments surrounding Hong Kong's gold ambitions and the expansion of China's bullion infrastructure are unfolding at a time when the global financial system is experiencing noticeable structural adjustments. The evolving approach to reserve management, storage location, and trading platforms reflects a broader shift in how nations and institutions view the gold market's role within international finance. While traditional Western hubs have long dominated bullion pricing, custody, and settlement, recent initiatives across Asia suggest a growing effort to diversify those structures and establish additional centers of influence. Within this context, China's strategy appears to involve multiple interconnected components rather than a single policy initiative. The effort to attract sovereign gold reserves, the expansion of the Shanghai Gold Exchange's offshore vault network, and the push to strengthen Hong Kong's trading infrastructure all form part of the same broader framework. These measures collectively aim to reinforce China's participation in bullion logistics, increase its institutional presence in international markets, and support the development of financial mechanisms linked to its domestic currency and trading platforms. The offshore expansion of storage facilities is particularly significant because it directly affects how international participants interact with Chinese-linked bullion markets. By extending vault capacity beyond mainland borders, the Shanghai Gold Exchange can offer storage solutions that are geographically accessible to a wider range of central banks, financial institutions, and bullion dealers. Hong Kong's role in this process is central, as the city already functions as a major gateway between mainland China and global capital markets. Strengthening its vault network and trading infrastructure therefore serves both practical and strategic purposes within the broader financial system. At the same time, the effort to promote yuan-denominated precious metals products is closely tied to these infrastructure developments. Expanding the physical and institutional reach of the Shanghai Gold Exchange creates additional channels through which such products can be traded and settled internationally. This approach reflects a coordinated attempt to increase the global visibility of China's bullion pricing mechanisms, while also encouraging broader participation in markets linked to its currency. By combining trading platforms, settlement systems, and storage capacity, policymakers appear to be working toward a more integrated structure that supports both domestic and cross-border financial activity. Hong Kong's position within this framework gives it a distinct role in facilitating these connections. The city's established financial infrastructure, regulatory environment, and international trading links make it a natural location for expanding bullion-related services. Officials have highlighted that its existing status as a major import and export center for gold provides a strong operational base for further growth. This foundation allows policymakers to pursue expansion strategies that build on existing trade flows rather than creating entirely new market channels. In addition, the city's emphasis on security and stability within a complex geopolitical environment has been presented as an important factor in attracting gold storage activity. Authorities have indicated that these conditions make Hong Kong appealing for investors seeking reliable custody arrangements for their bullion. Storage demand, in turn, supports a wider range of associated services, including trading, settlement, insurance, delivery, and logistics. The development of this broader industry chain is seen as an important component of the city's strategy to deepen its participation in the global precious metals economy. The Memorandum of Cooperation signed with Shenzhen's financial regulatory authorities also plays a role in this broader integration process. By improving regulatory coordination and supporting local dealers, the agreement is intended to facilitate smoother cross-border bullion flows between Hong Kong and mainland markets. Such coordination can help reduce operational friction, strengthen liquidity channels, and encourage market participants to expand their activity within the region. The closer alignment between the two jurisdictions reflects a wider pattern of financial cooperation aimed at reinforcing regional market infrastructure. These developments are taking place against the backdrop of continued geopolitical adjustments that are influencing financial policy decisions around the world. The movement of gold reserves, the creation of new storage networks, and the strengthening of regional trading platforms all point toward a market environment that is gradually diversifying in terms of geography and institutional structure. While Western centers remain important, the expansion of Asian infrastructure suggests that global bullion flows may increasingly involve multiple hubs rather than a single dominant system. Settlement and storage services is becoming more distributed across regions. The initiatives announced by officials indicate that the city aims to secure a larger role within that evolving structure by building capacity, strengthening cross-border coordination, and aligning its market mechanisms more closely with mainland institutions. This approach reflects an effort to position Hong Kong as both a regional anchor and an international participant within the changing bullion landscape. As these initiatives continue to develop, market participants are watching closely to see how infrastructure expansion, regulatory coordination, and cross-border cooperation translate into actual trading activity and storage flows. The combination of policy signals, institutional partnerships, and logistical investments suggests that the process of reshaping gold market participation is being pursued through multiple channels simultaneously. Hong Kong's strategy, as outlined by officials, represents one of the key components of this broader effort to influence the evolving structure of global bullion markets. Hong Kong's effort to establish itself as an international gold trading center represents the continuation of a strategy that has been developing over recent months and aligns closely with broader national financial objectives. Officials have made clear that the initiative is designed not only to expand local market activity but also to increase China's overall presence in the global bullion system. The measures announced include expanding vault capacity to more than 2,000 metric tons within 3 years, encouraging bullion dealers to build or enlarge refining facilities in the city, and strengthening cooperation with mainland authorities involved in gold trading and regulation. These steps are intended to build the infrastructure necessary to support higher trading volumes, more extensive storage activity, and improved settlement capabilities. A central element of this strategy is the launch of a fully state-owned gold clearing system, which is expected to begin trial operations later this year. The clearing platform is designed to provide the settlement and processing framework required for a competitive bullion marketplace. Officials view this development as an important component in positioning Hong Kong as a viable alternative to long-established Western trading hubs, such as London. By establishing a dedicated clearing mechanism under state ownership, authorities aim to enhance operational credibility while reinforcing institutional backing for the city's gold market. This initiative forms part of the broader effort to deepen Hong Kong's integration with mainland financial systems and to strengthen coordination between the city and institutions such as the Shanghai Gold Exchange. The push to align Hong Kong's gold market more closely with the Shanghai Gold Exchange reflects a wider effort to integrate infrastructure, liquidity, and regulatory coordination across jurisdictions. By improving connectivity between the two systems, policymakers aim to support cross-border bullion flows and enhance market efficiency. The Memorandum of Cooperation signed with the Shenzhen Municipal Financial Regulatory Bureau further underscores this objective, as it is designed to improve regulatory alignment and facilitate smoother liquidity movement between Hong Kong and coastal mainland regions. These agreements signal a coordinated approach aimed at strengthening the region's collective role in gold trading and storage. Developments involving sovereign gold reserves also illustrate how these regional initiatives intersect with broader international trends. Bloomberg has reported that Cambodia's central bank is expected to store part of its gold reserves in Shanghai Gold Exchange vaults located in Shenzhen's bonded zone. Cambodia currently holds approximately 54 tons of gold, accounting for roughly 25% of its $26 billion in foreign exchange reserves, according to World Gold Council data. The report further indicated that other unnamed central banks have shown interest in storing their gold with China. These movements are taking place within the context of close economic ties between China and Cambodia, including infrastructure development under the Belt and Road Initiative, record bilateral trade reaching $15 billion in 2024, and China holding roughly one-third of Cambodia's debt. At the same time, analysts have observed that China's actions occur amid broader global financial adjustments, including increasing instances of gold repatriation from traditional hubs such as London. A number of countries have chosen to move gold reserves closer to their own borders, reflecting shifting preferences in reserve management. China's efforts to attract official reserves, expand offshore vault networks in locations including Hong Kong, and promote yuan-denominated precious metals products represent interconnected elements of a larger strategy aimed at strengthening its position within the global gold market Expanding offshore vault infrastructure supports greater international participation and increases the visibility of Chinese trading platforms beyond mainland markets. In summary, Hong Kong's intensifying push to become a regional gold storage and trading hub forms part of a structured and coordinated approach that connects infrastructure expansion, regulatory cooperation, clearing system development, and sovereign storage initiatives. Officials have emphasized the objective of increasing China's share of international gold trading and enhancing influence over price formation, areas historically dominated by Western financial centers. Through vault expansion, state-owned clearing operations, closer alignment with mainland institutions, and strengthened cross-border regulatory coordination, Hong Kong is positioning itself within an evolving global bullion landscape. These developments reflect a comprehensive effort to reinforce regional market capacity while contributing to broader national ambitions in the international gold sector.